Sweet earnings for Mumias Sugar. That's what Renaissance Capital released a report on the Mumias Sugar today. They project revenues will increase by 37%, and they also raise the value of that particular stock to 13 shillings and 1 cent. Do you share in this opinion?
Thank you very much, Fenley. I'm really glad to be here. Definitely, in terms of long-term projections, such a share is very good for buying. But I have a bit of a concern, especially in terms of the short-term and medium-term, mainly because of the liquidity of the share. Also noting that recently we had a secondary IPO for Mumias some years back, and we had a bonus issue which definitely affected the pricing of the share. So because of that bit, we may have a bit of a concern. But the fundamentals of the share are good, and definitely the diversification strategy of the company is also very promising.
Well, still staying with the H1 results, what's in for EABL, which is, also quite another big hit, and we see investors very keen on that particular stock?
Well, EABL definitely is another very good counter, mainly because of their dividend payout, which is very generous and among the blue chips in the industrial sector, and very, very promising in terms of performance. And so definitely it's another good counter to go for, especially noting that it has not risen as much as BAT as you observed.
Mentioning BAT up 17 shillings today, what's happening behind this counter, especially keeping in mind the results are just about to come out and they have an interesting dividend policy for investors? Well,
BAT definitely has a very generous dividend policy. Even it's one of the best in terms of the industrial sector, because historically, like the last financial year, they give 15 shillings per share. So when you see it going up 17 shillings today, definitely it's showing as though people are already beginning to factor in that in terms of the announcements that are going to be pending.
Safaricom, that's finally touched IPO point. We are seeing the market beginning to correct itself. What do you expect to see going forward?
Well, for Safaricom, the year end is still due in March this year, but definitely because of the rise that it had made, especially over the last few weeks, definitely that was not very much sustained in terms of the fundamentals. But the pricing is still fairly okay, and it's still a fairly good counter to buy. And we are hoping that for people who manage to exit at 6 shillings, this is a good time to begin preparing to buy back.
And what other stocks are you looking at?
Well, I'm looking at still at the banking stocks. I'm very bullish on the banking stocks, especially some of the ones which have had risen marginally and now are beginning to correct themselves, like Barclays Bank, which is now down to 49, Cooperative Bank, which is now down to 9 shillings and something there. Also KCB, which has been fairly stable, and not many people have really been pouncing on such a share.
How about Access Kenya? We've seen them just complete the buyout of OpenView. The ICT sector seems very interesting. The Seacom cable and the other cables are operational. Is that a counter that you're interested in?
Well, Access Kenya, I would be interested in it, especially for the long term, mainly because of the concerns that we are looking at in terms of the ICT sector. There had been a bit of an issue in terms of how the ICT sector is going to be performing, especially in the region, especially mostly because of the competition that we are seeing from companies like Safaricom, which is coming in with a very new twist in terms of offering internet services. And so basically in terms of the market penetration, yes, it has a bit of a potential, but in the medium term or short term, definitely the performance of the share might not be as good.
Just looking at another level, Central Bank today released a report that remittances from Kenyans in the diaspora are higher than we saw in the last half. What impact do you see, keeping in mind how the diaspora has pushed forward investment in the equities market and also the bonds front?
Well, if I look at it in terms of areas like real estate investments, which basically has been competing with in terms of performance, well, unless we see a bubble burst in terms of the real estate investments, we may not see too much getting into the equities market, especially looking at the historical trend, especially over the last 1 year, where we've seen a lot of foreign investments in terms of foreigners as opposed to locals. But definitely we might see some of that coming into the equities market, mainly because of the optimism that has come, especially in terms of the economic growth that's expected, as well as company announcements which are looking fairly better than previous years.